Listen up because the electric vehicle war just saw a critical battle won by Rivian. This company is hanging tough, proving they can make vehicles that people actually want to buy despite massive industry headwinds. They just dropped their third quarter numbers for last year and they beat Wall Street expectations on revenue. And get this, they actually turned a gross profit. Rivian pulled in $1.6 billion in revenue. That is a massive 78% jump from the same time the year before. They delivered 13,201 vehicles to customers, a big spike that analysts think will be the highest delivery quarter for quite a while. But here is the headline you need to care about. Rivian reported a gross profit of $24 million. This is huge because Wall Street was expecting a loss of around $40 million. Now, let me be brutally clear. They are not profitable yet overall. They reported a net loss of $1.17 billion. But that $24 million gross profit shows serious progress. How did they pull it off? It wasn't just selling trucks. Rivian's core vehicle business actually still lost about $130 million in the quarter. That $24 million gross profit happened because of their software and services segment, which was heavily boosted by their new partnership with Volkswagen. That partnership contributed over $150 million in revenue. So, where do we go from here? The entire future hangs on one vehicle, the R2. Rivian is pouring everything they have into this. The R2 is a new, smaller SUV expected to start at around $45,000. That price point is aimed at the average buyer, unlike their current R1 vehicles, which can cost over $100,000 when loaded up. The company's convinced the R2 is the key to finally achieving scale and long-term financial health. Management confirmed production for the R2 is still on track for the first half of next year at their Illinois factory. They say the R2 will cut material costs in half compared to the current trucks. That is the kind of cost cutting that turns big losses into big profits. Now for the bad news. The electric vehicle market is facing a serious slowdown. The rush of sales we saw in the third quarter was largely fueled by consumers scrambling to buy before the federal tax credit of $7,500 completely disappeared. Analysts say losing that credit is going to be a huge headwind for demand moving forward. Also, global tariffs are still a major headache, adding cost to every vehicle built. The good news is that Rivian found ways to lower the expected tariff impact from thousands of dollars per vehicle down to just hundreds of dollars. That's a small win, but it matters. For the rest of this year, Rivian still expects to lose a total of about $2 billion to $2.25 billion. They have around $7.1 billion in cash, which they say gives them a solid financial cushion to launch the R2. Ultimately, Rivian is placing a massive bet on the R2 and their Volkswagen partnership. The next 12 months are a test to see if they can execute that plan, hit those production targets, and move from being an expensive niche player to a mass market competitor. If you want to keep track of this wild ride in the EV space, make sure you hit the like button, subscribe to the channel, and ring that bell for notifications. I'll catch you in the next one.